Morning, everybody. Welcome to Wise Tech for Wise Money. I'm Gary Wayne, founder of A1 International. At A1 Solutions, we work with financial service businesses, trading firms, and market participants to improve efficiency, scale intelligently, and grow through smarter use of technology, also using systems and operational strategy. This podcast is part of our mission, real conversation with real people who build an infrastructure that actually powers global markets. Today's episode is titled Institutional Trading, Risk and Global Market Access. I'm joined today at Novion Global by James Robilliard, who is Head of Risk at
Good morning, Gary.
Novion.
Yeah, thank you very much. Really appreciate your time. Thank you much for having me on your podcast. Someone of your caliber to host us is always a privilege. So thank you very much for bringing us on.
I was just going to add that Novion is a London-based brokerage.
I'm in the London office right now. We are London-based. We have global reach. We have global connection to facilitate clients, but we are very much London.
So tell me a little bit about yourself, James.
Sure.
How you came to work.
My background goes through from banks. I started relevant to now. I was probably a Dutch bank I worked in, where a phenomenal lady called Patricia taught me all about market risk. I was the Padawan learner to her. That was some time ago now. I also from then went on and learned. Came with all the abilities of market risk. Took that to a Japanese bank, which is a very interesting style. With them, I learned treasury. I learned about capital, the market side, trading side, all the usual stuff, applying proxies to various risks. I mean, I don't want to go on for too much. Following that, I moved on to a clearinghouse, took the enterprise risk program there, helped push that forward. And so my background is quite broad. And I'm absolutely thrilled to join Novion, where I can actually use all of it. So normally I'm only using a piece, but here it's fantastic. I'm involved everywhere I can help. So I absolutely love it here.
So tell me why you chose risk as opposed to trading.
To be honest, it was in the maths. It was the joy of it. The origin story for me on this one was again a long time ago. I was working under the loan book. This is like some time ago. And we had a monthly FX sell-off. And then normal process at the end of the month, we'd sell it down to the base currency. But then all of a sudden, we got a call to sell it off like on the 22nd, 23rd. And we're going, every time we sell FX off, it costs. Why are we doing this? And the answer was VAR. It turned out that the market had got so volatile that we had to lower the position for the FX exposure, and this went, wow. If we're making huge business decisions off the base of these models and what's going on, and that just lit a fire in me. And I am fascinated by the intricacies of how A can equal B and how you can balance C, and that effectively took me down the risk path. And my aim with it is to help like the front office do the best they can do by I try to remove all the risks so they set them free. That is the aim of what I'm trying to do with risk.
Tell me, how does your background then shape how you think about trading infrastructure?
Okay, well, again, like very much risk orientated. So I like things to be solid. I like things to be dependable. Basically, you've got bread and butter stuff like VAR and HVAR. With those, you can then assess the more interesting stuff, like the whole AI world coming up is fascinating stuff. But so I want to facilitate that, to set that free now. So I start by making sure we got all the basic models down. We've got all the VAR, the HVAR, stress things, liquidity testing. We have all the basics down. We meet all our CAS regs, all our MiFID. All that is absolutely nailed down. So then we can start looking at the next piece. I mean, like AI is such a fascinating area for me. It's like it is the spreadsheet of our era. If you look at what spreadsheets did back in their day, they took like a week's worth of work just changing it to being like minutes. And then with this, you then had everything, and you still now prototype. You know, if you want to throw something out quickly, you might do it in a spreadsheet. AI is that next tool. It's the tool for this generation. That is the spreadsheet. You know, so
Well, obviously, we agree. I mean,
yeah,
it's our business. But just tell
absolutely.
me, why do banks consider risk as not a support function, but a core business function?
Sure. They theoretically always have, but if you actually look at the real life practicality of how they've done it, the stories there more interesting. You've got like from bearings falling over, suddenly you need to have teeth, right? So all these functions that were kind of treated like reporting functions, suddenly you had compliance. You know, you had the regulators looking at all the banks and they're saying, "Okay, show me your three lines of defense, right? Where's your second line risk? Where is your first line analysis of risk? You know, what are your exposures? All that sort of coming in. Suddenly, you know, this is actually quite a few years ago. I'm older than I look, by the way. You know, and with this, then they're going, okay, right. So what is our exposure? How do we manage this? Right? And also, well, it became the most important thing, although briefly, and now it's settled back down because all the banks had to effectively just do almost another audit again on top, going, okay, are we under control here, right? And when that happens, suddenly you have risk saying, right, no, you need to sell that FX position down. You got too much. You need to lower that exposure. You need to put a macro hedge on to cover the Russia invasion in Ukraine, right? You've got all these portfolios, and individually they're fine, but what's the global perspective on this? What is the view here, right? So then suddenly with that risk element coming in, then like the banks are realizing that, again, like I try to say, it's what sets you free. You get the basics down, you get under control, you get all the stuff done properly, and then you are ready to then take the next step. You know, you can grow because you are built for it. So that is why risk has just, you know, really come up. It's where it should be. I would say that I'm a
You
risk guy,
mentioned
right?
bearings. I knew Nick Leeson. He was our broker before he did what he did. Well, I could never understand, having been a broker, a manager of a team, you know, that also oversaw back office, is how they actually did not understand what he was doing.
Right. Yeah.
So, you know, every day in futures, you know, probably more so now than even then, you know, back office, SEEB, open positions, closed positions, margin calls, etc.
Yeah.
And I just don't understand how I never raised a red flag even in the early days of limited risk profile.
Yeah. It is phenomenal. Actually, we've got a slight connection then, because although I didn't mention which Dutch bank I worked for, I've seen the 5/8 account, and everyone was scared to touch it. So yeah, we've got a
Unbelievable. I
slight
mean,
connection there, I think.
you know, it could not have not been seen other than, without being rude, everyone was on a backhander.
Yeah, I won't comment, but I would say that you're a man who knows what he's talking about.
So listen, moving on from that bad episode, and I have to tell you, Nick Leeson was not a very nice person. But moving on from there, for people listening who don't know anything about Novion yet, can you give us an overview of what the company does, a little bit of its history,
Sure.
how it was founded, and what it does on a global basis?
Yeah, sure. So it was founded in 2019. And from the very beginning, we have had a very simple aim of that we want to create a firm that could be like the true extension of clients' trading needs, right? So you have people who are very good at what they do. They could be moving orange juice physically. They could be handling rice. You know, they all these commodities that they do. But what they don't do as well is necessarily know how to hedge the position, right? So if a price goes really high and you're selling it, you want to be able to lock that in, so then you remove the risk of losing it. And then equally on the other side of it, if you're someone who needs to buy, you know, if you're making a million loaves of bread, you know, you want to be able to, if you see the price comes low, you can hedge it back out that way. So the aim of Novion has always been to service the client needs, to bring specialism. We really know what we're doing. We're all over CAS, we're all over MiFID, all the regulatory stuff we can take care of. We can do all the reporting. We make sure people know their P&L, we know their position, we know their risk exposure. We don't get in the way of our clients. We're here to add to our clients. We're here to bring that specialist ability to let them do what they do well, while we help them remove their risk by trading into the market for hedging.
So do they trade for you, or do they just hedge and manage risk through you?
They manage their own risk technically, because the way we're set up under the regulations, we're very active on that. They manage their own risk, but we provide them the means to do so. So we are connected to every clearing market out there. So if they want to hedge, whether it's Brent or they want to hedge, you name the commodity, quite frankly, then we will put a position on in their place, matching what they want to do. So we are part of this clearing chain to the clearing houses, where they have a secure.
Do they open the position with you, or do they say, "Look, I'm long of it could be FX or whatever"?
They technically own a position to us. So we're match principal. So if they want a position, they'll come and call us, and we'll have a position with them and then match it to the market. Right. So we remove any market risk on this for our perspective, and they are effectively market risk neutral as well, because they're hedging out the physical on their side.
And what markets do you cover?
Wow, anywhere you want to be with a client. I'm very protective of our clients. But we're on the big players. We're with ICE, CME, anywhere that you would want to be looking for main commodities. We're in there, and we've got the ability to connect through other, I call them friends, clearing members and such, that will set us up for anything. So we're ready for any client who wants to hedge anything that's in the main market. Where we can go anywhere, do anything, global reach. We're looking to open a place in Singapore, an office there, because Singapore's incredible. You've got half the world's population in short flight haul for Singapore. You've got all the oil tankers passing through, because the way the geography is, So yeah, we're looking to keep growing, keep being there, and offer facilities on a 24-hour framework for our clients.
Tell me about your client mix, and I obviously don't want to know names, but are they all professional, or do you cover retail clients? Is it hedge funds, family offices, asset managers, corporate? Just give me an overview.
Yeah, no problem. I will hold back on some details, but
Yeah,
professional investors, and currently we don't give them advice at the moment, but that's only because this is the optimum setup for us right now. We are ready to adapt to our client needs. So yeah, professional investors who know what they're doing and need to hedge in the market, but they want some professional entity to manage all the regulatory reporting, manage all the the settlement and all the et ceteras that you do.
I think they contract out to you.
In many ways, you could see it that way
to some degree.
Yeah, I mean, from their internal perspective, they're just trading with us, and we take care of the rest. So effectively they are, we like to say we're the gateway to their markets. So if they've got any commodity they want to hedge, they take a position with us and we sort the rest out.
So to sum up market access, give us an overview of what it really means, an institutional finance. Just walk us through how professional clients access markets for a firm. A lot of our listeners won't understand that. So.
Sure, no, it's a very good point. Thank you, Gary. I feel your steady hand on the ship here. So let's say I like the classic one of orange juice because it's an old story. Let's say you have someone who's producing orange juice and they want to hedge out their risk of the market. They could come to us and say, right, I need to buy this. They, being a professional investor, they'll understand about the maturities and how things roll. And they'll come to us and say, put a position on, and we'll say yes. And from there, we would then match in with, say, ICE's orange juice, and we'd take a position which exactly matches what the client is. So the end result is there's a position in a very safe clearinghouse that matches what the client needs over there. So they come to us, we mirror it, to a clearing member process.
And that's on a global basis, yeah?
Yeah, we go where our clients are, and we go to the markets our clients need. So we do consider ourselves global. We do most of it often is in energy areas, but I'm hesitant to say that because I don't want us to be limited. You know, people think we're limited to that. It could be literally any commodity, any producer, buyer or seller.
Brokerage services?
Apologies, Gary. Say again.
Do you provide prime brokerage services?
I would say, please come talk to us
Okay.
and talk to
I
our
know
CEO.
there's category A clearing and category B clearing.
We are available to meet our client needs. I know I'm dodging here, Gary, but we are meeting our optimum regulatory setup, is what I'm saying.
Fantastic.
So,
I just, from a clearing perspective, from my experience, when I talk to GPP, whatever they're called nowadays, GIS, SocGen, whatever, they always provide category A and category B. I think category B, if I'm not incorrect, is prime brokerage, and I think the others are non-segregated accounts. As head of risk, how do you structure risk inside a brokerage and trading environment?
wow, how much detail do you want? Okay, so
I don't think we want to put people to sleep.
fair enough. I'll try to go for the high level summary. Okay, so any cash that comes in ahead of a position is under CAS regs. That gets segregated and very well looked after, monitored, reported, etc., etc., etc. Once the position's needed, then the money's moved across, effectively goes over the wall into the MiFID world, where it then gets placed into the market via us, and that includes margin as well. And again, tracked, monitored, reported. And then when they close the position, it's simply reversed. So as the position closes, margin's released, that gets passed back and then put back into the CAS framework for holding accounts. I'm trying not, as you said, trying to keep it succinct. So
that's good. I mean, as a trader, there's always tension between performance and protection. Obviously from a trading perspective, but we've seen the downfalls, but people want to maximise their opportunity. A lot of the time they think, God, risk management, our risk department, compliance, they're keeping me from making money. How do you balance from a risk department, bearing in mind the commercial aptitude of the trader, to balance commercial performance with proper risk control?
Right, that is an excellent question. I always say it always goes back to the regs, right? So starting point for me is to make sure we're meeting every regulatory requirement. So we also make sure we have all the standard basic stuff, make sure we've got VAR, stress VAR. After that point, once we're covered on there, I'm much more open, as long as our we have a stellar cyber security here. Right? Once all those basics are met, they're effectively free to do what they want to operate in. A good example is there are algorithms that look for the best price across different suppliers. Right? We pride ourselves on offering the best price for our clients through our associated networks, and having that technology. I just get out the way of it. Once we make sure our risk is covered, the frontline functions are set free to go and find the best price in the market and then give that back to our clients. We work very hard on this.
How do you decide? I mean, you as an outsider looking in, you see all these platforms, trading companies offering all sorts of leverage. Some in my mind are quite dangerous. The levels they offer. Especially with people that aren't really qualified to do the business. However, how do you decide on the margining and leverage controls versus opportunity?
Okay, again, an excellent question. So there's multiple layers on this. First of all, we operate with professional investors. And although we can talk to people, we don't technically give advice. We let them do that. So first of all, they've got to have the knowledge to begin with. Sorry, you had a second point there, Gary. Can you run that by me again?
How do you manage the margining versus leverage and their trading ability?
I'll keep it as succinct as I can. So, for example, someone like ICE, and they've recently moved across to IRM2. They've got their own margining models. I've made sure ours are effectively a mirror to the best. So I'm copying ICE's process, the 500 days, 25% stress VAR, running our own margin calculations. So we're in line with what other clearing members and other clearing houses are doing. excuse my voice. On top of that, we've sourced out the best people. There's a lady called Diana who I think's the best in the world at credit, personally, and she's come in and helped us with our credit models to make sure they're the best in the world. And then you can do effective credit assessment on top. And then should there be any need, you can add additional margin on top. Whether we do or not, I would say at the moment we are very supportive of our clients, and we do our best to give them the most useful access. But I do, of course, make sure our risk is covered.
As an AI automation platform company, we install a lot of dashboards. Yeah, and obviously if I was installing one for you, it would be a dashboard where you could see everybody's positions and all the risk. Do you have that already, or do you have a form of that?
I've been building that myself since I joined. Yeah. Now, I'm not saying you couldn't do it better. You probably could, but yeah, I do have that. But we're open. We are constantly looking for the best in class in things. We've got the Iron software on to help with the clearing process. We've also got a full mirror that we're building in house on our own light core system, because we want the business continuity, disaster recovery, the independence, right? So we are constantly looking for the best and looking to bring it on where we think it's better than us. We are looking to bring it in. So we're very much open to that. Yeah, bring it.
Okay, so I want to ask you a live, real situation problem. So we had silver and gold going to the moon.
Fun times.
And then only this weekend we saw it plummet 25%. Now, when I looked at the chart, it had gone up huge, but it had gone back down past probably the last 50-day moving average and looked very bearish, although it had a rebound. I'm not sure whether it's a dead cat rebound or a proper rebound, but how do you manage people's margin control and risk on that?
Sure, excellent question.
So fierce.
Yeah, so excellent question. What I was reading about it, I heard rumor, and I don't know if it's true or not, that JP Morgan effectively cornered the market and put a squeeze on. I don't know if that's true or not.
It wouldn't surprise me.
But therefore, would it rebound or not? I have to be really careful, because if I do anything that could be constituted as advice, I get in trouble. So I've never been in trouble, and I never intend to be. But how we manage the exposure?
Market manipulation, don't we?
Yeah. So how would manage it? We don't go from that end. We go from the back end. So we know the positions. We've got a full history of VAR models. We've got shocks. What I do is where you identify stress periods. It's like VAR's interesting, the fifth, but if you look at it from a liquidity perspective, actually the first, sorry, off camera. So you see that bit, right? That actually gives you a cash flow stress. So you can apply that potentially. So you are running your existing position today versus historical, and you could, but we don't, theoretical scenarios. We use historical basis to see how our cash flow is impacted. We effectively estimate shocks. Now, one of the things I really like about this process is each of these shocks has a historical reference. So, like a good one, like on the Brent market, for example, you can see how much it moved with the Russian invasion of Ukraine, right? So you know that it would take the level of one big country invading another to move the market in that way. So if what's in the news is less than that, you can expect, generally speaking, a lesser move. So you have an idea of what's going on. You estimate the shocks coming, and you also make sure you always got the liquidity in ready to go in the back pocket. We have facilities available to bridge any gaps, and that's from not just shocks. That's also our 24-hour operations. Clients can ultimately get called if necessary. This is part of the setup, same as any process. But we do our best to make sure that our clients' clock is observed, and we assist. But yeah, we do the liquidity calculations. We do the stress testing. We make sure that we're covered. We make sure we meet all the capital requirements for liquidity too. A long list. of making sure we've got
Sure.
our own cash ready to go to cover
How
any
does
gaps.
how does a company like Novion build trust with its client?
To be honest, consistency. My understanding of our clients really like us because whether they do this themselves or not, but they probably price test us. So far, to my knowledge, they've always been very happy to stay, trusting us to get the best price in the market. So far, all evidence is yes, we do. We maintain our reporting. We make sure they're covered. Never panic because we're predicting market moves ahead of time from a cash flow perspective. So we're ready. We're covered. Calm and stable. Again, like this is what I do here. Is make sure we're just good.
Do customers liaise with you direct?
No, we have a specialist team for that. I'm more the behind the scenes working with
I
our.
think it's wasted because you're a pretty jovial chap.
I'm happy to talk.
Great
Yeah, I'm happy to meet and greet. But on a daily basis, like talk, if most of the time they just want to update their hedge to their actual physical position, so they'll be talking to the front desk and the client relations. But yeah, I'm happy to meet and greet if you know anyone who wants to join. Open with us.
I know a lot of risk guys, and I have to say that you're very, very approachable. So
thank you very much. I try to be.
Move on to global operations and regulations. Operating across multiple regions obviously creates complexity. How does Novion manage risk and operations across different jurisdictions, different regulatory environments?
Yeah, again, excellent question. So first of all, and I was alluding to earlier, is we optimize our current client portfolio. So we make sure wherever we're operating is the regulations that we're applying to, and we're ready to move to other regulations should they do it. But to be blunt, we are London. We are very much in this framework. London has fantastic relations with the US. London also has the mirroring arrangement with the EU. Most, ICE operates here with, their clearinghouse and exchange. It's even though it's ICE Clear Europe, it's in London. You've got also metals. So we do our best to use the optimum approach, but we're also aware of other areas. Like I said, we're really excited for Singapore. So, we're slow and steady, but also move quickly. It's hard to.
Are we still the financial capital of the world, or is that now New York?
London, well, traditionally, wasn't it? And New York, to be honest, Gary, you'll know this much better than me. But London was the FX world, right?
Yeah,
and New York was more like stocks and then commodities. I actually think, that I think Europe's going to boom in the near future. Personally, this is just my personal opinion here, not professional advice. But I think we're geographically we're also set, right? We've got Europe, we've got connections to Asia.
Time zone.
Yeah, and we're right in the middle. So
in my day, without boring you, because I'm so old, but there was no international market. We used to deal with Asia, and come 1 o'clock, there was no real market because London would wind down and go to lunch, and there was no New York. I mean, this is like late 70s, early 80s. So, it is amazing how London has maintained its presence and I think adapted and grown. And to me, I think London is the main centre.
I agree,
I think
right?
New York is very powerful.
Yeah, oh, no doubt. But also London has a long history of skill and expertise in this area. I mean, that's something that you can really see apparent, like who works here and the caliber of people we have here. And you've seen attempts for Europe to move things to Frankfurt, or maybe Paris wants to take a slice, and they throw a tax, they throw can't remember the name of it, but the trade tax basically on it, and then they get surprised when no one trades in Paris. Whereas London has the quality, it has the history, it has the ability. We are good here at this stuff. London is fantastic. I'm actually from the West Country, if you but I moved to London because I love London so much, and working here for such a company as Novion is exciting. London based, follow all, or the regulation is from London. It's just, I think it's the best, quite frankly. But we keep a global view. There's with the global events going on, the EU might demand settlement in euros for European products? I mean, like Dutch gas, TTF. Will they demand euro only settlement? Would they accept dollars? I mean, it's not likely, right? But it's stuff you got to think about. So we keep an eye on.
Answer me one thing, and it's more of a clearing question than
Sure.
a risk question. But what is the difference between Euroclear and Clearstream?
Clearstream's okay. Euroclear and Clearstream. Oh, you're really testing me on the difference of this one. They are one of them's Brussels and the other one is kind of Europe. If that makes sense. That's my understanding. Am I getting that wrong, Gary? You tell me.
No, I understand, but I never actually, if I'm honest, understood what the difference was. I mean, most people use Euroclear, but some people want to stick to Clearstream. It's meant to be a cheaper way of clearing, but I just wondered if there was technically any difference in function.
To be honest, I'm really hesitating because I don't like giving most of an answer. I would rather give no answer and then give a full answer later. If I can get back to you on that one, that would be great because you got me curious now. What is the real difference?
Let's talk about modern trading businesses and their infrastructure, technology. How does today infrastructure and systems shape risk management?
Right. For starters, cyber. Excuse me. The history of technology is fascinating. Again, I'm older than I look. I used to type in Swifts. I did money market stuff a long time ago. I used to physically type in Swifts to move money across the Swift network. Was it MT202s and all that stuff. So so what we're seeing is we saw technology become a thing, and then maybe people want to move that under operations, and then cyber become a thing, and then we realized that actually technology needs to be entirely owned by cyber. So technology is gone, but cyber's in, and that's technology. You've got that side of things. Then you've got the international banking framework. You've got companies that can get cut off from the network. We spend a lot of effort on financial crime monitoring and money laundering to make sure that we're not doing anything we shouldn't be doing. So you've got to have that framework. And actually, we were talking about, because again, we're always looking to get the best in class. We're always talking to people. Interesting there, they're saying that AI is a huge thing there. You can't do this properly now without AI because to put it really simply, the human brain can hold 7 or 8 things in a go, right? So what an AI do is effectively, it doesn't have the mental ability a human does, but it can hold so much more in a single go, right? So what they're finding on the financial crime world is that without AI, you're not fast enough. You're not aware enough. You're not connected enough. So, that's a fascinating aspect. Are you talking more banking though? Because I know I've gone the technology route.
I'm talking generally within the infrastructure.
Yeah, well,
money
banks,
markets, capital markets, how they operate, how we manage risk, how we clear, how we even trade. We've seen vast differences from the 80s and 90s when it was all telephone and open box voice systems to moving up. The bond
so
market,
you just reminded me of something. There was. I think it was the Dutch one. There was an old regulation that didn't get updated. So on the loan, well, again way back the loan, there was a fax machine that had to officially receive a fax to confirm a deal that basically went straight into a box and then put away because all the communication was now digital, but the regulation still required a fax for official confirmation.
Yeah, I can understand that.
And there was some poor intern who basically had to read the digital comms and compare it to the faxes to make sure that was done. And that was, they did eventually sort that out. But yeah, you follow the rules, but sometimes it's quite lagging behind the technology. But there's so many fun stories in this stuff, isn't there?
But looking forward, obviously you're a young guy.
Thank you.
Long time ahead of you. So where do you see institutional trading, brokerage, risk management heading in the next 5 to 10 years?
I think it's again part of my Japanese banking world history here is I see two sides. There is the strong and steady, steadfast. This is sort of how the Japanese banks like to operate. They got two halves. You got like I said, I always go back to VAR and stress file, all the basic stuff that are effectively models. That's going to remain, and the reason why is with that you can measure your AI. You can measure the new thing, right? Because you've always got that base comparison. So you're always going to have Regulatory bodies always like things slow and stable. That will remain. The normal processes that we've had forever will also remain, even as a reference point. And then on the other side, you've got all the exciting stuff coming in. You've got the AI looking for things. You've got, one thing I've been talking about here is indirect hedging. Again, I won't go into much details, but
just clarify what's indirect hedging.
Okay, so there's many definitions of this. So what specifically I'm referring to is you may want to hedge one commodity that doesn't have a liquid position, but if you work out a combination, you can then actually hedge it with liquid stuff. So you can say, right, these are a 6% hedge of that. You can do this, but if you want to find these connections, you need to have lots of models. But the best way to do that is probably have a combination of models with AI on top to then mix through, right? So there's all sorts of fun stuff. There's all sorts of exciting future potential here, but it will also always be after you've done your bread and butter, your basics, right? You'll have your VAR, you'll have your margin.
You
Yeah.
just need to code the system to work out the correct correlation between the illiquid commodity bond or whatever it is with the liquid.
Yeah, you're giving away my secrets, Gary. I was trying not to.
Well, only that, obviously I look at things like this.
Yeah.
If you had a magic wand then, and you could change one thing about how institutional trading and risk management works today, what would it be?
I would like a freer market in the sense that I think there's clients out there we can help, and I want to find them. I want to identify people who are holding physical things and they are not hedging and they're not aware of it. And if we could have some setup that could do that, then they would be less risky. The economy would be stronger, and obviously we would grow as a business ourselves. So I think that sort of communication to bring people together, I would love to see.
Brilliant. No, I think this has been, this is obviously a subject near to my heart. I've really enjoyed it. You've been a pleasure to have on the show.
Yourself too, Gary.
Yeah, I hope you've enjoyed it.
Oh, excellent, yes.
It highlights how modern markets have changed. It shows you about risk. It shows you how companies like Novion Global are operating and dealing with risk, which is the key thing, I believe, in trading and money market operations. And I'd just like to ask you to tell everybody where they can find you, where they can find out more about Novion Capital, etc., etc.
Sure. And Novion Global. Sorry, I had the word capital and I messed that up. Novion Global, that's who we are. You can find us on a website. Quick Google will bring us straight up. And then you can also find us on LinkedIn. Come and talk to us. You might even see me around places because I like to go to conferences. We did CPAC in Singapore last year. We were sponsored that one. The commodities trading one. You'll see me around, but if the fastest way is go to our website, you'll find us, and then come talk to us. I must say, Gary, though, actually, it's been an absolute pleasure and honor to talk to yourself. I'd love to find you in a pub sometime and hear all your stories.
Yeah, I'll talk more in a minute when we sign off, but
sure.
I want to thank you for being on board and attending. I want to thank all our listeners for listening in.
Yeah, can I thank them too? Thank you.
Guys, watch out for Novion Global. They're a fast-moving, growing business.
Demands attention. Global. We've got awards for growth. Exciting times.
And you can find more about me on LinkedIn, on our webpage. As usual, A1 Solutions are here to help with AI automation and growing your business. Thanks for looking, and we'll see you on the next episode. Thanks, James, once again.
Thank you for having me.